Hey, everybody, and welcome back to You Talk, We Listen. We are brought to you by the fantastic folks at OtisWho Network. And today we are diving deep into the world of startup investing. And this was all sparked by an article we saw about Mark Cuban and his experience on Shark Tank. Now, you would think that someone like Mark Cuban, a billionaire on Shark Tank, would just, be printing money. But this article actually revealed that even Cuban has taken some hits with his Shark Tank investments.
Yeah, it's really fascinating because I think the article does a great job of highlighting how sometimes the public perception of investing can be so different from the reality. And we see these really flashy deals on TV, and it's very easy to just kind of assume instant success. But if you dig into it a bit, the article highlights that, Cuban invested roughly $20 million across 85 companies over 11 seasons of Shark Tank. And surprisingly, he's actually down overall.
Down.
Yeah.
Really? That's kind of wild. I mean, he's Mark Cuban. So if someone with his experience and track record can actually end up losing money investing in startups, what does that really tell us about this whole type of investing? Is it just a gamble?
Well, it definitely highlights the inherent risk in startup investing for sure. I mean, the data shows that something like 90% of startups fail, which is, pretty staggering statistic when you think about it. But it's also really important to understand, like, why Cuban might be down, even with all of his expertise. So is it just bad luck? Or is there a deeper trend in, like, his investment choices?
Okay, so 90% failure rate. That's pretty daunting. How does anyone make money in this space if the odds are so stacked against them?
Well, venture capitalists like Cuban are really playing a different game. They're not going for base hits every time. They operate on this principle called the power law, where they're expecting like massive returns from just one or two companies in their entire portfolio. And those outlier successes are so huge that they offset the losses from all the companies that inevitably fail.
Ah, so it's not about picking winners every single time. It's about that one massive win kind of overshadowing a whole bunch of losses. But is that strategy really realistic for someone who, doesn't have Cuban's billions to play with?
Exactly. Think about it like this. Cuban invested in a company called Beatbox Beverages on Shark Tank. It's basically a portable party punch company. Well, they've now crossed $100 million in sales. So that one win alone could potentially offset losses from several less successful ventures. But you're right, for everyday investors, this high risk, high reward strategy is usually not the way to go.
Yeah, that makes sense. I don't think most of us can afford to lose big on a bunch of startups hoping for that one, unicorn to come through. So is this article suggesting there's maybe a safer approach? Like, what's the alternative here?
Well, the article contrasts Cuban's Shark Tank investments with his purchase of the Dallas Mavericks, which, as we all know, has been wildly successful. And it was a totally different game. Instead of betting on a risky startup, he acquired a well-established and already profitable asset.
Okay, so while buying the Dallas Mavericks is probably not an option for, well, most of us listening, I get your point. Established businesses are generally going to be a safer bet than unproven startups.
Precisely. So, investing in publicly traded companies with a solid track record can be a much more stable option. I mean, think about a company like Nike, for example. They've been around forever. They have global brand recognition. And while their value has taken a dip recently, their core business is still incredibly strong.
So even big companies have their ups and downs, but they've at least got a history of success to back them up. But let's get back to Cuban for a second.
Yeah.
If he's down on Shark Tank, how is he still, well, Mark Cuban? His portfolio must be doing all right overall.
You're exactly right. And that's where diversification comes into play. His Shark Tank investments are just one slice of a much larger pie. He's got his fingers in all sorts of companies, from healthcare to tech to entertainment. This spread of investments is key for any investor, whether you have millions or are just starting out. It's about not putting all your eggs in one basket.
So even though he's down on some of those Shark Tank bets, his overall portfolio is probably doing just fine because he's diversified across different industries. It's like having a financial safety net.
Exactly. And there are ways for everyday investors to build that same kind of diversification, without needing a billionaire's bank account. One way is through exchange-traded funds, or ETFs.
Okay, ETFs. I've definitely heard that term thrown around.
Yeah.
But break it down for me. What are they, and how do they actually work?
So think of ETFs like baskets of stocks that track a specific market index or sector. And they offer instant diversification because you're investing in multiple companies with a single purchase. Instead of trying to pick individual stocks, you're essentially buying a piece of a whole industry or a market trend.
That sounds a lot easier than researching hundreds of individual stocks, that's for sure. So if I wanted to Like invest in those stable, established companies we were just talking about. Is there a specific ETF for that?
There are actually quite a few. One example is the ProShares S&P 500 Dividend Aristocrats ETF. It goes by the ticker symbol NOBL.
Noble, like nobility. I like it already. Tell me more about this Noble ETF.
Well, it invests in large, stable companies listed on the S&P 500 that have a long history of increasing their dividends. So this means these companies are not only profitable, but they're consistently sharing a portion of those profits with investors.
So it's like investing in a bunch of reliable dividend-paying companies all at once. That sounds like a pretty solid way to build wealth over time.
Exactly. And remember, this is just one example. There are tons of ETFs out there designed to meet different investing goals and risk tolerances.
This is all super interesting. But before we get too deep into ETFs, I think it's time to maybe shift gears a bit.
Yeah.
So we've talked about how startup investing can be really risky, even for someone like Mark Cuban. And that diversification is super important to help, mitigate that risk. But how does all of this translate to someone who's not a billionaire shark, right? What can the average person do to start investing wisely?
Well, that's the million-dollar question, isn't it? I think it's a great reminder that even the most successful investors can experience losses. Even Mark Cuban. And it really underscores the need for all investors, regardless of how much money they have, to do their due diligence, before jumping into any investment.
Absolutely. It's easy to get caught up in the excitement of a pitch, but, emotion shouldn't be driving your investment decisions. So where should someone even begin? There are just so many options out there. It can be totally overwhelming.
Yeah, it's true. The world of investing can definitely seem daunting at first. But, it's not rocket science. First and foremost, you need to define your investment goals. So what are you hoping to achieve with your investments? Are you saving for retirement, a down payment on a house, maybe a trip around the world? Basically, your goals are going to shape your entire investment strategy.
Okay, so goals first. Makes sense. But what about risk? How do I figure out how much risk I'm actually comfortable taking on? I mean, some people are okay with big swings, others are more, slow and steady.
Yeah, and that's a very personal decision. There's no right or wrong answer when it comes to risk tolerance. But a good rule of thumb is to be more conservative if you have a shorter time horizon or if you're just naturally risk averse.
Okay, I see. So if I'm saving for retirement, which is decades away, I might be more comfortable taking on a bit more risk because I have, more time to recover from potential losses.
Exactly. Time is on your side when you're thinking long term. But if you're saving for, let's say, a down payment on a house in the next couple of years, you'd probably want to stick with more stable investments, even if the potential returns are, a little bit lower.
Got it. Shorter timelines usually mean lower risk tolerance. That makes sense. Okay, so let's talk about the mechanics of investing. How do you actually buy stocks or ETFs?
Right. So you can open an account with an online brokerage. There are tons of options out there, each with different fees and features. So do your research and choose one that aligns with, your needs and investing style.
Okay, so I open an account, I deposit some money, and then I just start buying stocks. It's that straightforward.
Well, not so fast. Remember all that research we talked about? You need to thoroughly understand the companies or the ETFs you're considering. Before hitting that buy button?
Right, of course. I need to look into their financial performance, their industry, their management team, all that good stuff. But is there anything else I should be thinking about?
Don't forget the bigger picture. So you also need to consider the broader economic and market conditions. Are interest rates rising? Is inflation a concern? These factors can significantly impact your investments as well.
Wow, it's a lot more complex than I initially thought. It sounds like investing is an ongoing learning process.
Oh, it absolutely is. But that's part of what makes it so fascinating. The more you learn, the more confident and successful you'll become as an investor.
All right, so let's say I've done my research, I've picked my investment, I've opened my brokerage account. Now what? Do I just buy them and forget about them?
Well, investing isn't really a set it and forget it kind of thing. You need to monitor your portfolio regularly, make adjustments as needed, and, stay informed about what's happening in the market. It's kind of like tending to a garden. You need to water it, weed it, and prune it to help it flourish.
I like that analogy. It makes investing seem less like a high-stakes game and more like a natural process, of growth and development. But what if I'm still feeling a little lost? Are there resources out there to help guide me?
Absolutely. You don't have to go it alone. You can consult with a financial advisor, explore websites and books, listen to podcasts like this one, and you can even join online communities where you can connect with other investors and, learn from their experiences.
So it's all about building a network of knowledge and support.
Exactly. Investing can be a really rewarding journey, both financially and personally. It's about taking control of your financial future and making your money work for you.
That's pretty inspiring. It makes me want to just dive in head first. But I also know that it's important to be prepared and informed before making any decisions.
Yeah, you've got the right mindset. And remember, you know, we're here to help. We'll be exploring different investment strategies and resources in future deep dives, giving you the knowledge and tools you need to succeed.
Awesome. I'm looking forward to it. But before we completely wrap up, I want to circle back to Mark Cuban and his Shark Tank experience. What are some of the key takeaways here for our listeners?
Well, I think it's a fantastic reminder that diversification is absolutely crucial, for mitigating risk.
It also highlights, I think, that there's an important distinction between investing in startups and established businesses. Startups, yeah, they offer that potential for explosive growth,
Mm.
but they come with a really high failure rate. Established businesses tend to be more stable, but their growth might be, slower.
Right. It's all about finding the right balance for your individual goals and your risk tolerance.
And remember, investing isn't just about picking stocks or ETFs. It's about understanding the market, doing your research,
Yeah.
and being an active participant in your own financial journey.
Well said. Investing is a lifelong learning process, and the more you learn, the more confident and successful you'll become.
So to all our listeners out there, we encourage you to keep learning, keep exploring, and keep striving to reach your financial goals.
And as always, we're here to guide you along the way.
Now, for the grand finale of this deep dive, we want to leave you with a final thought. If you are Mark Cuban, with all of his experience and resources, what kind of investment strategy would you create? What would your portfolio look like?
Think about it. Explore your options. Remember, the power to shape your financial future is in your hands.
Thanks for joining us on this deep dive into the world of investing. We'll see you next time. It's pretty amazing how, one article about Mark Cuban and Shark Tank can spark such a wide-ranging conversation about investing, right?
Yeah. It really does. It speaks to the power of a good story. By connecting Cuban's experiences to these broader investment principles, we've been able to kind of unpack some pretty, complex concepts like risk and diversification and the importance of research in a way that's hopefully, been engaging and relatable for everyone listening.
Yeah, I think so. And I think one of the biggest takeaways for me and hopefully for our listeners is that, investing isn't just for the super wealthy or financial experts. It's something that anyone can learn and participate in, regardless of, their background or income level.
Absolutely. I mean, from the outside looking in, the world of investing can seem intimidating, but it's ultimately about empowering yourself to take control of your own financial future, right? Setting goals, understanding your personal risk tolerance, and making informed decisions that align with your values and aspirations.
Exactly. And you don't need millions to get started. The important thing is to just begin, to take that first step on your investing journey. Even a small amount invested consistently over time can grow into something pretty significant, right?
That's the beauty of compound growth. And remember, there are so many resources available to help you along the way. Don't be afraid to seek out information, ask questions, and connect with other investors who are on a similar path.
Like we talked about earlier, building that network of knowledge and support can be so valuable. So if even Mark Cuban, with all of his experience and resources, can take a hit on Shark Tank, it just goes to show that investing is a continuous process, one of, learning and adapting.
Yeah, there are no guarantees in the market. But by understanding the fundamentals and making informed decisions based on your research and, a clear understanding of your goals, you can significantly increase your chances of success.
Investing isn't just about the numbers and spreadsheets. It's about taking control of your own destiny, building a future that you're proud of, and creating opportunities for yourself and your loved ones.
Well said. And remember, whether you're aiming to retire early, buy your dream home, or travel the world, the power to shape your financial future really is in your hands.
So thanks for joining us on this deep dive into the world of investing. We'll catch you next time.